Good evening, everyone. You're all very welcome to another market outlook, taking a look at the key themes and events ahead for the week of the third week of July. Obviously, tomorrow being Valentine's Day across the world. So, of course, last week, not too much out in terms of data. A lot of choppy, consolidated markets after what was a very, very vibrant first week of the month. And obviously, of course, last week we reflected on the consolidation, the expectation of fairly muted markets. And of course, we saw that by and large. We saw markets moving fairly sideways. You'll see it now in some of the assets, although some had nice sell-offs, like for example, gold. It wasn't, I suppose, on a cross-asset perspective that we saw the widespread selling that ensued. So broadly speaking, I suppose, firstly and foremost, as we look to the week ahead, right, what's coming out data-wise this week, what's coming out trading-wise. And of course, the first key thing as we start off the week is, of course, tonight. We do have Australian data tonight at 11:30 p.m, followed by Japanese growth statistics coming out at 11:30 tonight as well. So there's going to be a couple of busy days of price action ahead this week, particularly Tuesday, particularly Wednesday as well, which we're obviously going through now. With the expectation that we're going to get a little bit more vibrancy, a little bit more volatility in the markets compared to what we saw last week on some of those main assets, broadly speaking. So I suppose first things first, tomorrow, just a quick observation. We do have core CPI coming out in the US tomorrow. That will be something that market participants will be watching very, very closely because, of course, inflation through 2022 was the through narrative. Of course, higher than expected inflation, indices sold off, dollar was the safe haven hedge. And of course, more recently in the last 3 or 4 months or so, obviously weaker inflation or lower than expected inflation, and of course indices and risk assets has seen some progression to the upside, and of course tonight we will obviously be looking at that, reflecting all of that broadly in all of these assets nationwide. So of course tomorrow, what are we looking at when it comes to CPI? Well, normally speaking, there's 2 or 3 data points that are really, really significant in terms of the markets. Okay, firstly is the core inflation, which of course we're expecting it to go from 5.7 to 5.5%. So of course that is the expectation that inflation is going to continue reducing. Now, the big question tomorrow will be is whether the inflation narrative continues to decrease or reduce as quickly as we've seen both in November, December, and January. Each of those 3 months, we're seeing 0.5% or greater declines nearly in the inflation levels, according to current data. Now, of course, if we start to see that go from 0.5, 0.6% per month of a decrease back to, let's say, 0.2, 0.3, that is illustrating that the inflation isn't coming down as sustainably and as quickly as many would like, which of course means what? Well, broadly speaking, the slower the inflation comes back down on the inversion, obviously the more consistent the Fed are going to have to be in terms of having higher rates, because of course the quicker the inflation comes down, the quicker the Fed and other central banks can start reducing those rates accordingly. So that's obviously an important consideration to take into account. Now, the second element tomorrow, which I'll be looking at closely, is the year-on-year figures in terms of US inflation. And of course, that's going from 6.5 with the expectation of 6.2. So if we're seeing 5.9, 5.8% tomorrow, that's going to be a bullish thing. You're going to see buying in the indices come 130. And of course, on the inverse, if we see a fairly static movement or maybe price action, maybe not as aggressive otherwise, then you're probably going to see a little reaction. So it's just all about being recognizing of that. Now, before we have US inflation figures tomorrow at 130, we do also have the European Monetary Union or Monetary Zone growth figures for Q on Q. So Q on Q is expected to be 0.3%. Well, that was the previous figure. 0.1 is the estimation this time around, which is very, very minimal growth. And of course, year on year, they're expecting 1.9. So if you look at previous statements by Lagarde, they give fairly regular growth forecasts of what they would expect the European Union to be doing, or the Monetary Union to be providing over 3, 6, 12-month projections. So that ultimately is quite important as well, because of course, if we're seeing growth go from, let's say, 2.3 maybe back to 1.8, 1.7, that's going to be a bad thing tomorrow morning for the data. And of course, you're going to see subsequent selling in the European indices, the likes of your Dax, the likes of your Euro Stoxx. You could even see the euro being affected as well. So it's important to look at these things consistently. Okay, so tomorrow, very, very busy day. We've got UK data at 7 o'clock, unemployment levels. We've got some Swiss data out, marginal, probably to little to no effect. We've got European data out at 10. And of course, tomorrow we've got US data out at 1:30. So it's going to be a busy day tomorrow, or we're at least hoping for that to be the case. Now, on Wednesday, as we progress to Wednesday, what have we got on Wednesday? Well, we've got the UK's inflation expectations. So, of course, UK inflation has been the one that's been running the hottest between, let's say, Europe, Eurozone broadly, the US, Canada, Australia, New Zealand, Switzerland, and of course the Norges, the Scandinavian countries with Asia as well. So UK has been one of the worst of the primary G7, G10 currencies. And of course, we have seen UK inflation go above 10.5%, 11%, which again illustrates the issues that BOE and of course the UK Tory party have to try and develop initiatives to try and bring this inflation back down. Okay, now structurally speaking, obviously 10.5, you're looking to see a break tomorrow under 10 on Wednesday, should I say, under 10%. If we see 9.9, 9.8, I think that's really the start of higher rates in the UA, higher rates by the Bank of England starting to work. Now, normally speaking, when central banks raise interest rates, it takes roughly about 9 to 12 months before the actual effect of those increasing of interest rates actually starts to take physical action in the economy. So that's why, of course, all of the interest rates that we saw last summer, they haven't really taken hold in the economy yet. So you're looking at it from the Bank of England perspective, but also from the Federal Reserve perspective as well. So it does take time for these to actually start having a meaningful, long-lasting effect on the economy. But now we're starting to see it. And of course, in recent weeks, the inflation levels coming back down a little bit more significantly in the last, say, 8, 12 weeks or so is starting to be a positive thing. But we just need for that to continue. And of course, if that continues, it allows for a more sustained recovery in the next maybe 3 to 6 months in indices. Now, of course, let's see how that one plays out. Let's see how that narrative plays out. Now, Wednesday afternoon, of course, then we've retail sales in the US. Now, retail sales is one of kind of the primary data points that a lot of analysts, a lot of forecasters tend to look at when it comes to economic data. Why? Well, generally speaking, if retail sales is less than expected, that means people aren't spending as much money in the economy. If people aren't spending as much money in the economy, that generally means growth is going to be lower. So when you look at it on a cross-sector basis, leisure, hospitality, the purchase of like normal goods and services for the household, luxury goods as well. So of course, when we start to see retail sales come back down or reduce, that's diminishing purchasing power by normal individuals in society. And of course, that's not necessarily a positive thing. So we just need to be kind of aware of that as well. So when it comes to Wednesday, retail sales is going to be an important piece of economic data that we will be looking at very, very closely as well. So that's really kind of where we're kind of looking at for the next couple of days, really just kind of looking at the broader consensus in the data. Of course, Wednesday, we will be back for another run through just after we've digested all of the inflation figures, the growth figures, and of course, the CPI figures, both in the UK and the US as well, broadly speaking. So now that we've kind of looked at the economic calendar for the next couple of days, let's now look at the markets broadly. So what is the kind of the big thing that we saw in the DAX early last week? Well, we saw that massive recovery following NFP. We actually saw a significant recovery in the dollar. So we went from this kind of 101.50 level, last summer lows from May, June, all the way back up into this kind of 103.50 level. Now, structurally speaking, last week, I was waiting to see kind of what was there when we were trading up here between 103, 103.50, what was going to be the meaningful reaction, okay? Would we get a correction back into clean out this initial impulse that we saw from NFP, or were we going to continue to see the markets progress higher and pull back into the January NFP figure? And of course, that comes in roughly around 105, 105.50. So they were, I suppose, the two key contributing levels or narratives posed by the markets, broadly speaking. Okay. Now, as it turned out last week, broadly speaking, the price action in the FX markets was a bit of a snooze fest. So, of course, the markets aren't always moving at 100 miles an hour. And I think that's really, really important as well, knowing when to trade is equally more important as plotting analysis and actually taking trades off of clearly defined analysis. Now, broadly speaking, we haven't really seen that because, of course, the dollar has been very much back and forth between this short-term low of last Thursday at 102.60 and, of course, near-term structural highs today and last week at 103.80. And that's really kind of what the dollar has done in the recent week or so, because other than that, really not too much to report, because it's just been very consolidated, very back and forth in terms of the shorter narrative. So for me, really, again, looking to see, do we get a correction back into this value area down here, 101.50, 102, or do we see a taking of these short-term highs here and really allowing the price action to continue with this risk off narrative, and obviously stronger dollar yielding that potential continuation all the way up to this 105 level. And I think patience is really, really important here, particularly, let's say, if you're trading higher time frames, to make sure that you have clearly identified consensus to look out for. Okay. Now, if we look at Euro USD, I suppose the first things first, let's look at the order flow, right? Before we kind of get too entrenched into kind of where we're currently at, let's look at the order flow. Now, of course, tail end of the week before last, first week of February, very, very clear sell-off. Last week, we are technically creating still bearish order flow in euro dollar, right? We've had structural lows here just under 107, pullbacks to kind of just underneath 108. And of course, last week we had new structural lows into last week's close. And of course, the beginning of this week, just above 106.50. So structurally speaking, we are still creating that kind of lower low, lower high scenario with that slight deviation towards risk off. Okay. Now, I suppose at this point in time, it really just reflects on how does the price action react here, because of course this is really kind of consolidated value area here between 107.10 and 107.50. And do we see really the price action breakthrough? Well, structurally speaking, if you're looking at the order flow, it's important to look at the origins of previous impulses, because that will kind of clear the way for kind of clearer price action. And of course, last week we had a very, very clear U-turn from this area up here at 101.70, right? So when you go from short-term highs to lows, you can see that if there is any sort of correction, or if there is any sort of deviation or change for continuation in, let's say, dollar strength, euro dollar to the downside, it's probably going to come in this region here. And again, that's setting up the narrative of kind of 107.40 to kind of 107.60, right? That's probably the value area to pay close attention to. And of course, if that doesn't play out, and of course, we're really taking this area out at 107.60, then you're really looking for a more moderate correction. But of course, that's then insinuating, should I say, that weaker dollar play. And of course, that weaker dollar play means we're really looking for price action to come back into this level. So obviously, we're looking at the DXY for clarity, because of course, euro dollar inverse correlation, cable GBP USD, moderate inverse correlation. So of course, if you're trading euro, you're trading pound, or you're trading dollar, there is a linear relationship between these assets. So it's important to understand the relationship as well, understanding sentiment, and then being able to obviously fine-tune that, broadly speaking. Now, gold is probably the most interesting one, because of course, last week we had a very, very clear sell-off, very, very clear run-up. Now, off where have we rejected, or where did we come off from? This weekly level. If you go back up to your weekly level on gold, you'll see that very, very, very clearly. Okay. Where was the weekly level that we kind of mentioned in previous weeks? 1947. Where was the level that rejected perfectly last week? And of course, the week before, 1947. And of course, we had that very, very significant runoff 2 weeks ago. Last week, very, very consolidated. But this week now, we're starting to see selling coming through again. So the order flow is still very, very much bearish. Now, that's pointing to the narrative of, are we going to get back into this area down here? This value area between kind of 1770, 1790 really being the area of interest. Because of course, when we look at the daily order flow, you can see very, very clearly, very short-term dead cat bounce recovery into 2 out of 3 days of selling. So Thursday, selling, Friday, bit of a pause, Monday, selling to start the week. So it wouldn't really be that inconceivable to see the price action return into some of these levels down here, sub 1800. I think 1800 highs broadly back into 1770, 1780 is a fairly likely play. Now, I think second to that, you also have to look at what goes up must come down, and what goes down must come back up eventually. Because of course, that is price action. Price action is the continuous battle between buying order flow and selling order flow in the markets. If there's more buying, obviously we know it's going to go higher. If there's more selling, it's going to go lower. So what did we see through December and January? A very, very strong, massive run up in gold strength. We went from 1770, 1780 to 1940 with little to no resistance. Okay, little to no resistance. Every time we made a high, we got a pullback, and then we springboarded to the upside. Now we're getting the inverse. Very, very aggressive initial selling. No mitigation of this initial consolidation up here as of yet, anyway. And of course, last week, very, very clear initial lows followed by dead cat bounce, followed by new structural lows today. And even if you're looking at the order flow on the 4 hour or 1 hour, very, very much pinned to the downside as things currently stand. So really now it's just a case of clarity, right? So given that we know that the order flow is bearish, it then becomes a case of, well, selling into pullbacks, selling into retracements, and looking for that continuation to the downside until such a time as this leg of selling price action from up here at 1950 becomes eroded, becomes exhausted. We see the change in scenario, and we get that correction all the way back up to this initial value area, which, as we said, is up here in the 20s and 30s. And I suppose that's really the important thing here. Now, when we isolate gold on the shorter parameters, just to kind of given that multi-time frame narrative approach, we've had structural bottoms. We've had that very, very nice kind of flagging structure, kind of that pullback. And of course, what's happened? A kind of very, very clear initial breakout to the upside, followed by that bearish engulfing back into short-term volume area, and obviously a very, very clear taking of structural lows. And of course, with any sort of drawn pins, you can see that as well very, very clearly, because of course, this is the area to where we started selling from. Of course, you can see that there very, very clearly. And of course, second to that then is the structured lows that's been taken out. So of course, like a hot knife through butter, very, very clear breaking of lows into short-term recovery, short-term lower highs here, lower highs, lower highs, lower highs. And now we're kind of structurally breaking down again. So this really, gold really is struggling. If you're net neutral now and you're looking at positions, well, scenario one ideally would be rejection up here. Scenario two is on the shorter parameter, which is probably a rejection up here between kind of 55 and 60, broadly speaking. Now, of course, that's down to discretion and, of course, lower time frames. I suppose if you use lower time frames, you could very easily see a potential recovery back up maybe into this area here before we see anything. But at this moment in time, obviously, gold, me personally, I'm kind of waiting to see if there's any sort of kind of pullback after what's been very, very clear order flow really since Thursday at the early part. So worth just having clarity within the price action. And of course, if you're not overly comfortable or you're not getting those confirmations, let's say, for example, you have a trading plan, you have 3 or 4 things you look at, but maybe only 1 or 2 of those confirming, you're better off getting the confirmation, having peace of mind, trusting your analysis, even if it means that you're maybe not catching the trade as nicely as you'd like. That's okay too. Okay. It's all about risk reward. It's all about strategy. It's all about having a clear process. And when you have a clear process, you're less likely to FOMO in and more likely to have strict regimental rules of where you want to get in. And of course, have clear rules of engagement. So, of course, at this moment in time, that's where gold is currently at. Gold bit in no man's land. So really waiting to see if there's any sort of recovery against this kind of snap of price action. Now, indices. Let's look at S&Ps first. Okay, so S&Ps, firstly and foremost, what is the first thing we're seeing? Well, what I was kind of looking at today, I think is really, really important as well in the market dynamic, is understanding where we are in the cycle is also very, very important, because we know cycle analysis plays out. You've got monthly cycles, you've got yearly cycles on the higher time frames, down to the 5 minutes. You have 5-10 minute cycles as well. I think that's really, really evident, and that's really, really important as well. Now, when we look at S&Ps, when we look at the broader indices, obviously we knew, we've talked about it previously, 2020 year, very, very difficult year. 2023, a little bit more vibrant. We tend to know actually as well, we mentioned it in previous videos way back in November and December, around midterm election time, would we start to see a little bit of a correction? Would we start to see a little bit of a pullback? And of course, as it plays out, that's exactly what's happening, because of course, those initial highs, short-term highs in December has very much been taken out last week, and the markets are trying to push higher again. Okay. Now, when you look at the daily order flow, firstly, I think the first evidential piece of information that we're kind of seeing is obviously bullish price action into this August leg of selling in the S&Ps. August, very, very clear leg of selling, finds that bottom, very, very clear pullback, higher lows again, and we're seeing that gradual grind to the upside. Now, of course, that's really going to be important tomorrow, because, of course, if inflation comes out less than expected, you're going to see the indices fly. You're going to see the indices probably try and take out these local areas, and you're going to see the indices try and make new structural highs for the year. and again continue the correction to the upside. Now, if you look at 4-hour order flow, okay, there's two contrarian elements to take into consideration here in the S&Ps, right? If we isolate the price action from the beginning of the year, very, very clear bullish order flow, highs into lows, pull back into short-term decisional area, fairly nice rally again, new structured highs, another pullback into value area, into new highs again. And of course, what happened last week, what happened over the last few weeks, this impulse of bullish price action here into this structured high up here has been fully mitigated. Why? Because the price action has come back down to the origins of the impulse. And of course, what goes up must come down eventually, straight back to the value area, straight back to the point of interest. And of course, we've seen a fairly exuberant run up Friday into the close, and more prominently today as the markets continues to push higher. And I think now the really big talking point is, as we said, we've created highs into higher lows, into new highs, into new higher lows here, and we're trying to push higher again. So really now, I suppose the big talking point is this area here, this kind of, I suppose, short-term trend line liquidity that you can kind of see flowing off of that line. If we were to put in a trend line, you kind of see it there. Can this be broken? Right? Can the price action ultimately take this out, take out this most recent high, and ultimately try and take out the highs of the region? Because of course, on the upside, you can also see very, very clearly, if I remove the trend line, structured highs, very, very clear sell-off, double tap, rejection of key area, sell-off again, new structured lows, all the way back up to double mitigation. And of course, we've had a double mitigation, and then we've actually had a third mitigation of structured level. And of course, you can see that playing out very, very prominently. So really now, I suppose this area here in the S&Ps tomorrow is going to be really, really important to see, because of course, when you look at highs and you look at structural lows, we are roughly midpoint. So we could very easily break through. We could very easily come for another tap of this level down here. And I suppose these are the two levels to be looking out for. This region down here, and more prominently, a kind of a structural break through this liquidity area here, through these structured highs, and ultimately trying to push through. I think that's really kind of what's important here as well. And you can see it as well if you bring in the order blocks as well. You can kind of see that value area playing out right on point what we're talking about. And of course, these short-term highs up here, as we said, between kind of 41.50 and 41.80, broadly speaking. So worth keeping an eye on that to see how does the price action develop tomorrow, broadly speaking. Now, Nasdaq, let's have a look at the Nasdaq structurally speaking. So Nasdaq came all the way back up to this 12,800 level that we talked about. Literally rejected it on the daily perfectly last week, Thursday, and of course last week then got a second tap at 12.715. We talked about that last week as well. Now, structurally speaking, we have seen a fairly decent pullback, breaking this internal structure. So if we delve into the 4-hour for a second, look at the price action, didn't quite get back to this value area down here. However, sometimes that'll happen. So we are kind of midpoint. So I suppose really now it's a case of, well, this is very, very clear consolidation. If we draw it out, you can kind of see that there evidently. See break, false break again, try to break out, break of structure to the downside, and price actions coming back up. So I suppose tomorrow, really on NAS, the most important thing here is there any sort of reaction in this zone, right? So where are we really looking at? Well, if you look at 4-hour, you've got kind of two areas of interest here, 12,650 to 12,700. If you bring in fibs as well, short-term highs to short-term lows, you could actually bring in the peak if you wanted to, but I'm just focusing on this impulse because, of course, this was the impulse that was taken out. Then you're really looking at this area here. So I suppose that really becomes the talking point, really from 12,550 up to kind of 12,650. 61.8 is at 12,550, but more broadly, I think 12.6, 12,650 could be a very, very interesting level tomorrow. Now, of course, if the inflation comes out much lower than expected, we should be looking for this to really breeze right through. And of course, that means price action taking out this short-term consolidation and really looking for new highs, broadly speaking. So that's really going to be the narrative tomorrow. Just be kind of wary of that if you're trying to trade ahead of time. Now, last but not least, in the US indices, right, we look at Dow Jones. Now, Dow Jones, Wall Street, US 30, whatever you like to call it, very, 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 very consolidated price action in comparison to the other two in recent weeks. Because, of course, what have we seen really over the last 2.5 weeks? Well, Dow Jones really going sideways. S&P, Nasdaq outperformed. What happened 12 weeks ago when the Dax, the Euro Stoxx, the FTSE, the Dow Jones was rallying? S&P and Nasdaq were really, really flat, really consolidated, very lethargic. And of course, when those indices started to consolidate in previous weeks, the S&P and the Nasdaq has been doing a very, very strong catch up. And of course, if you look at the price action very, very clearly, you can see that as well. S&P's very nice run up in recent weeks, albeit flagging like with clear highs and lows. Nasdaq, similar scenario as well. Higher time frames, you can kind of see that as well playing out. Very, very clear run up as well. So you can see how the S&P and Nasdaq has outperformed the Dow Jones in comparison over the last, let's say, 2-3 weeks or so. Now, I think really what's evident here on the Dow Jones as well is where we currently are, because of course this was peak 2021 highs into 2022. The real inflection point coming up here at around 36,500. Clear lows, clear order flow all the way back into 29.5. And of course, massive rally in the autumn all the way back up. And of course, this daily order block liquidity area here at 34,875, which we talked about in December, very, very clear reaction. Now, since then, we've had a short-term break. We've had price action flagging in. This is probably more a broader time frame accumulation, consolidation structure. And really now it's a case of, can the price action ultimately try and break through and continue progressing to the upside? So of course, that's what brings in then the lower time frames, because what have we seen in recent weeks? Well, not really that terribly much, because of course, price action very up and down, has tried to break out multiple times. Last Thursday, I think, is the best example of this, because what happened? Very, very clear accumulation. This was Tuesday and Wednesday off the data last week. Of course, Thursday took the highs. And of course, what happened? By Friday, we'd taken the lows. So we've taken highs, taken lows simultaneously of this range, and it's come all the way back up to this local top here around 34,200. I suppose that's really now going to be the talking point to see whether this area here between 34,250 and I suppose the previous wick, whether these get filled. And of course, whether these get filled or not is going to be determined on tomorrow. And if the data, as I said, is weaker tomorrow and obviously better than expected CPI numbers and obviously lower than expected, then you're likely going to see the US 30 breakout. And that really then brings in this next level, which, as we said, is back into those December highs, which was at 34,875, should I say, alternatively. And then other than that, then you're really waiting to see, well, if that doesn't play out and we start to see a reaction, well, then the next likelihood is price action to really come down and try and take out these bottoms here, 33,500. But really, since the back end of January, 25th, 26th of January, we've literally been in a 600-700 point range in Wall Street Dow Jones, literally up and down continuously. And that's where we're currently at. And that really then brings into the European indices, right? So the European indices, just to kind of tidy a few things up, European indices has been obviously on a rampage, right? Since October, massive run up into December, a little bit of a pullback into year end. And obviously we got that kick on. So you're seeing Euro Stoxx, you're seeing the FTSE kick on again. And of course, this is something that we were looking at last week. We can obviously just minimize it for a second, go back out to the higher time frames. You can see it as well. Very, very clear bottom way back in the autumn. Structural highs, 4,000, a little bit of a pullback. And of course, price action springboarding higher, all the way back up to, yes, you name it, previous all-time highs. So European indices at this moment in time are on an absolute rally. They're on an absolute rally, and they look like they could very easily make or break previous highs. Now, of course, you look at the FTSE in comparison, what are we seeing? Well, the FTSE has finally broken out through this, well, how many year long of a consolidation? 4 or 5 year consolidation. Was the only index in pre or following COVID that never made new all-time highs until obviously this week. And of course, what's happening now, the FTSE is really continue to churn higher, continue to chug higher. We had that 78.15, which is previous top. So this was the weekly top from 2018. We broke through it. We retested it last week, held above it, and we're seeing that continue now. And of course, we are heading for 8,000. And I think if you're short now, you're really kind of starting to feel the pressure with the margin and the leverage and the liquidity, because at this moment in time, the order flow is still very much still very much bullish. We haven't even pulled back to this impulsive area here, which is, as I said, is at 7,500. And of course, the previous highs here at 78. It looks to be very comfortably ahead of those levels as well. Short-term time frames on the 4-hour perspective on the FTSE, again, continuation to the upside, highs, higher lows, highs, higher lows, getting those continued moves. And even if by using just kind of short-term fib structure, because of course trend is bullish, so we really shouldn't be looking at shorts, then you're looking at those moves. And of course, highs swing lows into highs, looking for that retracement all the way back to kind of key areas. And of course, price actions moving higher. 77, 79.91, 8039. We talked about it last week, 8,000. And of course, that now mirrors very, very closely to what we're seeing here on the FTSE. Now, Euro Stoxx, a very, very similar point of view here in Euro Stoxx as well. This was the kind of liquidity area, value area that we're kind of paying close attention to last week, 41.20 to 41.50. Of course, structured highs was made. Price action did get back to 50 fibs. There was a wick rejection at 61.8. Me personally, I was waiting to see if there's any sort of reaction down here on both Euro Stoxx and Dax. And of course, that really hasn't happened. Now, Dax is still trying to grind higher. 15.7s is in sight. Key kind of consolidation. There was a little bit of a value area down here between 15,000, 15,100. But of course, price actions moving higher. We have seen higher highs. We have seen higher lows. We have seen higher highs again back into this area here. Now, there is a potential head and shoulders for those who look at retail trading patterns. So you'd be kind of looking to see if that shoulder would form up around 15,550. But if that doesn't, then you're really looking for this to continue moving higher. And that, of course, then brings in continuated strength. And then you're looking for really a push through 15.7 and potentially running all the way back up into previous highs. And of course, that's what we talked about there in the Euro Stoxx, because of course, above 4,300, 4,340 is technically new highs as well. And you can see how this is playing out as well. So worth keeping an eye, but Euro Stoxx, Dax, FTSE, still very much bullish. S&Ps, Nasdaq, US 30, a lot less so. Okay. So that basically shows at the minute that there's maybe a cyclical reversion out of US based indices into buying of European indices in the broader, wider markets. And that seems to be something that's fairly evident at this moment in time. Okay. So that's pretty much where we are this week. Folks, of course, any questions, feel free to reach out to us in our Discord. Obviously, continue to kind of run the show in terms of liquidity, in terms of providing zero commissions. Obviously, we're looking to continue playing that out for the course of the year, and still looking to obviously promote and obviously be the #1 prop trading firm for 2023 as well. So big year ahead for Alpha Capital, of course. And of course, you'll be on hand to join us with our regular reviews, regular interviews in the markets as well. So of course, if you want to follow on for more content, click the like button and hit subscribe. Cheers, guys. Have a good week.